stuff. You're like, that doesn't even make sense. But so that's what has been typical for years and years and years. And I've been doing this almost 20 years. And I do a lot of VA loans, love helping veterans. But the good news is that is changing as of, well, it was kind of as of Friday. So there's a new form, and I'm going to try to share my screen real quick. Hold on, you guys. Let me. Well, it's not here. Let me try this. Hold on, guys. I'm not too great at this. All right, about this. Okay, I think I got it. All right, I got it. Can everybody see that? Okay. So this is, and there has been some chatter about it, but this is a, yeah.
Just shows us your documents window, not the actual document. We have like your list of documents.
Oh, well, that's weird because it's showing me. It's showing me that screen. That's so weird. Okay, hold on. Stop sharing. Okay, let's try this one more time. How about there?
Yes.
Okay, perfect. All right, so this is called the NPMA 33 form, and really NPMA only just stands for National Pest Management Association. So this is a 2-page form. The second page is just some verbiage, but the first page is the most important one. So this is actually going to replace our pest inspection and clearance. And this is awesome, and I'm going to tell you why. So if you look at the first, sorry, kind of the section, it says section 2, inspection findings, you'll see a box A and a box B. So really all VA cares about is any evidence of wood destroying insects on the property. So termites, beetles, any insects, they just care about if there's, you can see it. The second box is obviously showing, yes, there is visible evidence. So if the inspector checks box A, us as a lender, that is all we need. We don't need that. I at least don't ever want to see that 9-page pest inspection report again. And I don't need a clearance either. If they check A, that's my pest and my clearance. So if they check B, then obviously, just like it would be in the pest report, it's something that needs to be addressed and fixed. And then I still don't want to see a pest inspection. We just want to see this page again, just corrected. So so this changes things, because right now, especially with the market we're in, VA's kind of been put on the bottom of the barrel when it comes to offers, because realtors and sellers think that they have to clear and spend money to clear section 1 and section 2, and that could be a lot of money. And right now, we're in just a crazy seller market, so it's not, VA hasn't been as competitive. But now with this form, in fact, I'm getting my first one today. With this form, we can be more competitive, so the sellers won't have to worry about, oh gosh, or the listing agent has to worry out, oh gosh, we have to clear section 1 and section 2. So this might not be the best aggressive offer for you to take. So this is going to help. So even on your list, like I would recommend, even on, if you're listing a property, I know a lot of realtors get pest inspections up front. Definitely, I would get this report too. And then that way you have it for the lender. So when you guys order in a pest, the pest report, the pest company won't just give you this form. They're aware of this form, and they know about it and stuff, and they filled one out, but typically they won't just give it. So when you order the pest, you want to make sure you request this form, because obviously you still want the pest, you still want to know, if what's going on with the property, and you can still negotiate repairs, for your clients, but just know that I don't need that form and I just need this one. Is there any questions so far?
Just to clarify, this is just for VA. Will the other ones follow suit, do you think?
So good question. This pertains to VA because VA is the only loan product that we use that requires, was requiring a pest report. So FHA and conventional loans, a pest report isn't required. So we don't ever want to see that on the contract or, put into our hands because we don't need it. VA is the only one that has always, required a pest. And I think this form's been around. I think what has happened, and I know in Arizona, that's where my corporate office is, they use this form, but I think for some reason in California, I think somebody just kind of down the road always required a pest inspection and clearance, and no one's ever really questioned it. It's kind of just like, oh, that's what you got to do. So, so now with this is awesome news for us. So, but hopefully I answered your question.
Yes, ma'am. Thank you.
And I happened to be on Friday when Sonia and I had the conversation about this form, sitting at my Ponderosa listing, having my pest pre-inspection completed at that time. So I turned around and said, hey, can you make sure to include the form 33? And we got a preemptive offer that was a VA. And I was able to say, hey, just so you know, like pest inspection was done. There's a few things on there, but we're going to ask your buyer to take care of their own pest work if it's a preemptive offer. However, we're going to get that form 33. So you should find out if your lender takes that form 33 or not. And if not, I've got a lender that takes it because that could save your buyer a lot of money. And so their lender took it. So we got this form in addition to the pest report.
Yeah. And that's a good point, Amy. And I was going to put that disclosure out there is, lenders on a lot of things vary, and you guys see that, you're going to see that to where one lender can do something another can't, because there's things that each of them interpret a little differently. So I've been trying to just get the word out from my perspective, from our company, from what we're going to do. But definitely if you're working with another lender, check, make sure they will accept this form, because some may not, some may still want a full pest and a full clearance. So any other questions?
Albert, thank you.
All right, well, you guys are easy.
It's because we don't really know what to ask yet.
So yeah, and if you guys have specific questions on this, for sure. I mean, VA's, I love VA loans. VA loans are great. It's zero down for the veteran. It's no mortgage insurance. So it's a great loan for somebody who's, is either currently serving in the military or retired, National Guard, reserves. It's, good rates. So it's a really good loan. The pest thing was always kind of a stickler, with VA, and some people just shied away from it and like, oh, it's too much, or it's going to cost my seller too much money to even consider a VA loan. But that's why this is so important. This is going to change things with VA. One of the things a couple things that we do, and not just VA, but for all of our loans, I'm actually known for closing quickly. In fact, I have one we're going to be closing in 14 days. And so that's something that is important to me because number one, we want to help you guys make your offer stronger. I mean, the market is crazy right now, being a seller's market. So we want to go in and be aggressive on our end to help make your clients' offer stronger. So one of the things we do is we go in with a short close, and we shorten contingencies. So on my normal contingency, appraisal is 12 days. Sometimes we even go in with a no loan contingency because now on the RPA, and I'll just get in this because we have, some more time, but, it's more important than ever right now because that purchase contract, where it has the box of pre-qualified, pre-approved, and fully underwritten. So I tell my clients, we want to put you in the best financing position as possible to get your offer accepted. So in that case, we need to get them, the best one out of those three is fully underwritten. So pre-qualified just means, somebody over the phone is probably just asking a lot of questions to the borrower. How much do you make? What do you do for a living? What do you think your credit score is? Just kind of talking, kind of let's look at everything and I'll calculate it and what you're telling me. Well, that's never good because a lot of people inflate things. A lot of people, don't tell the full story. And sometimes sometimes they may even pull credit, but they're not looking at income and asset documentation. They're not verifying. If I'm telling you I make $10,000 working, or $10,000 a month working at Starbucks, I need to verify that, so that's important. So the next one would be pre-approval. So pre-approval, you're talking to the clients, of course, they're filling out an application, we're pulling credit. We ask for tax returns, W-2s, last 30 days pay stubs, 401k, 2 months bank statement. So we're getting this information up front and we're verifying. You tell me you're making $10,000 Starbucks, I'm gonna look at your pay stubs and W-2s and know, exactly what you make. And it gets a little complicated too sometimes when because people, like myself, I'm commission-based. I'm W-2'd, but I'm commission-based. And where you guys, being realtors, are self-employed. And that's a whole other beast itself in calculating income. So super, super important that we look at all the documentation. We even sometimes go further and get what's called a verification of employment, because let's say somebody's, a prime example is, a police officer. My husband's a police officer, overtime. A lot of them do a lot of overtime, or they get some shift differentials because they're working graveyards. So we can use that for income. We just have to have a history of it. So we may need to take a step further, get a verification of employment, and have the employer break down the last 2 years for us. So it can get really, difficult sometimes to make sure we're getting the right income, because 3 things I tell my people when I talk to my clients, and very first conversation we have is, number 1, I want you solid for financing. We've got to make sure you're solid with financing, because I never, ever want to put somebody's money at risk because I didn't do my job properly up front. I've been doing this, like I said, almost 20 years. I've never, and I'm proud to say it, I've never had anybody fall out of escrow or get declined on a loan because I didn't qualify them properly. Number 2 is that they're comfortable with their financing. That's important. Let's say I can qualify somebody for $800,000, but they may not want to pay, and they're not comfortable paying a monthly payment on an $800,000 loan. And then the last thing is that they understand their financing. And one of the things we do is I always send out a worksheet. We go over it with them and we talk about the program they're doing, the loan type, their monthly payment, their cash to close, down payment, all that good stuff, because I've had so many people come to me over the years and be like, yeah, they pre-qualified me. Yep, I'm ready to go. Well, do you know your rate? Do you know your monthly payment? Do you know even what do you have to bring in to close this loan? And a lot of times they're like, no, they've never went over that with me. So, we always provide a worksheet, and we send it to them and we send it to you guys as well. So exactly, what's going on and what the financing looks like. Pre-approval is, we're looking at all the documentation, we're pulling the credit, we're also running it through an underwriting engine. So there's 2 underwriting engines we use. And you guys have probably heard of Fannie Mae and Freddie Mac. They were kind of in the news a lot back in when the housing crash happened, but they have automated underwriting engines that we run every file through It's part of the pre-approval process. And we have to get what's called an approve eligible in order to say like, yep, you're good to go. And then we can get you into underwriting. So we also do that as well. And there's a lot of other backgrounds, work that we do on the file when we're pre-approving somebody. So after we do that, like they're pre-approved, they're solid in that case, but because of the market we're in and because it's such a competitive market, we are now taking that extra step. And normally, once somebody gets in contract after they're pre-approved, and they're in escrow, then we submit it to underwriting. Well, we actually do that beforehand. So we do what's called a TBD, which is a to be determined property approval. So we're taking everything we have on that pre-approval that we've done, and we're submitting it. We're submitting it into underwriting, so an underwriter can look at it, review everything, and they're like, yep, income's great. Yep, they got the money, they have the assets. We're good to go. So they give us and issue us a conditional loan approval based on just needing a property. So when we have that, a lot of times we can go in with a no loan contingency, which means like we're good on the loan. We already have an approval. We're good. So that's one less thing the seller has to worry about. So we've been doing that a lot as well. Do you guys have any questions?
I have a couple.
Yeah.
What is the lowest credit score you guys deal with? And where COVID is rampant, have you ever taken off their pre-qual because they lost hours at their job? Is that something?
Good. Yeah, that's a great question. So, so the first one is this credit score depends on the program we're doing. So we can technically go down to like a 580 credit score, but there's going to be there's going to be overlays. I mean, because it's riskier for an investor, right? So they're going to want, a lower debt to income ratio. Probably they're going to want to see, some reserves. They're going to want to see, just other compensating factors that can help with qualifying. But technically, yes, we could go down to a 580. And it depends on the loan product. So if you're using assistance programs, which, I'm going to talk to you guys about that, and we'll have one little, day talking about that. Those all have their own niches, and they have their own minimum required credit score. So that's with the FICO score. 580 is, I can't go below 580. And then your second question, oh my gosh, I'm trying to remember your second question now. Oh my gosh.
Will they get their pre-approval taken away if they get less than
On the COVID?
80, yeah, for 40 hours a week or whatever?
Gotcha. Okay, so when I initially talk to a client, I always I have certain questions that I ask them, and because of the COVID and stuff, it's changed a little bit. But yes, I ask them about COVID, and if they have either they were laid off, they have any gaps in their employment. So that all that matters. It matters if they're, and even qualifying in general matters if they're paid hourly. It matters if they are salaried or just commission based. All that comes into play. So when you're doing underwriting, it all has to make sense. It really does. It has to make sense. And as long as we have to paint the picture to the underwriter, and so they can look at it. When I'm getting to know a client, the underwriter's not knowing the client like I do. So I have to paint the picture for the underwriter and make it make sense. So, I mean, if there's a big gap in employment, and again, it all depends on the loan type, whether we're going VA, FHA, conventional, they all have kind of like their guideline on, going back to work or having a gap in employment. And then it also depend, sometimes we see trade work, right? So construction people that it's like seasonal work. So there's different guidelines for that. So there's not really just a black and white answer to that. But I definitely, when I talk to them, especially nowadays, to get a feel of how COVID has affected them. So we could make sure, we qualify them properly.
Thank you.
Yeah. Anybody else? All right. So yeah, I mean, that's pretty much what I wanted to talk to you guys about today. Like I said, I want to give you so much information for you guys, worry about it. I mean, my piece of advice is find a good lender that you can trust, that can help your clients and help you. Because I always say, if your lender's not helping you make that offer, especially right now, in the world we're in, if they're not helping you make that offer stronger and help fighting for that offer to get accepted, then you probably should find a new lender, because that is your job. And a lot of times, it's just laziness on some part of lenders, where they don't want to do that work up front. And it's so important. So that's, what we do. Love to get to know you guys some more. I know Amy sent me out a roster. So I'm going to also email you guys this report. So that way you can have it, refer back to it, read it, to help you when you do have a VA loan. But I'm always here for questions. When I email you guys, you'll have my cell phone number on there. You have all that information, and that's always the best way to reach me. And I have a great team that's here to help as well. So hopefully I can, have an opportunity to work with each and every one of you guys.
Leo and Liam.
Sonia, thank you so much for your time. I really appreciate it.
Oh, thank you.
And all the information, thank you, was very, very, very informative.
Oh, good. I'm glad. And don't ever hesitate to call me. And no question is like, people are like, this might be a dumb question, but I need to answer it. No question is dumb. Like, it's not. I've been doing this so long. I still learn things. And if I don't know the answer, I'm going to get you the answer. So never hesitate to reach out.
Can I ask a question? This is Tara.
Yeah.
So hold on, let me think for a second. So if a buyer, a VA buyer is, let's say, interested in a property and we want to know if it's VA doable, is that something that the lender confirms or no?
You're referring to like a condo or a community type situation, correct?
Yes.
Oh, okay. I thought you meant more.
I'm sorry. I probably should have specified that. I'm sorry. Yeah, a condo.
Yeah. So if you're, and again, another great question. If your client's looking at a condo, definitely, and you can always email me the address. I can verify if it's VA approved. So complex has to be VA approved, or it's got, and this is another thing that a lot of agents don't know, but it can also be a PUD. And a lot of times you can't, if you're questioning if it is a PUD, then you can call up title, a title company that you work with, give them the address, they can let you know, because us as a lender, we look as a PUD as a single family residence. PUD stands for planned unit development. So we as lenders, though, even though it can look like a townhouse or it might be a condo, it's the way it's zoned. If it's a PUD, we look at it as a single family residence, and then a VA loan is fine for it. So, but yeah, if you have any questions on a property and they're VA approved, just shoot it over to me. I can help you out.
I just have one. I'm sorry, Tara. I do have one quick question for you. Can a VA buyer using their VA loan still put in an offer over the appraisal price?
They can, yeah. They can absolutely do that. And that's kind of been going around too because of the aggressiveness of offers and releasing appraisal contingencies for VA loans. Because on a VA loan and FHA loan, you have to sign a mandatory clause. That has been brought up a lot because VA really hasn't addressed that, but that form has to be signed no matter what. But we as a lender are going to go off that purchase contract. So if the VA borrower is okay with paying a certain amount over appraised value or doing an appraisal gap or we're gonna go off of the purchase contract, but we still have to have that signed. So that's kind of one of those gray areas of, it's good, and I've closed some that way, but if it ever came back, and this is just so you know, if it ever came back into a court or something happened, they have that form and they can legally get out of the contract, even though they said, they waive their, appraisal contingency, or they're paying over. So, but yes, to answer your question, yes, as a lender, that is fine for us.
Okay, thank you.
Mhm.
Sonia, one last question. Sorry about the background. I have 3 2-year-olds. Do you see appraisals going away?
I think eventually, yes, they will. I think we will get into the whole algorithm, automated engine type of deal. We're seeing, and more on the refi side, but I've actually gotten quite a few last year appraisal waivers when it comes to purchases. But yeah, I think it's going to take some time, for sure. But I do eventually down the road. Yeah, I think it's going to be automated.
What type of time frame? Like a year, 2 years, or longer?
I don't really know, but I definitely, I would say more than 2 years, because it's going to take so much to get all the data in and to put this together. And then they got to test it, and that takes time. So definitely, I mean, I would definitely say within the next probably 5 to 10 years.
Cool. Thank you.
Yeah.
That would be fabulous since our appraisers are extorting us, right, Sonia?
Right. Yeah. Yes. Or we need to get more. We just need to encourage more people to be appraisers. There we go.
There we go.
All right. Well, I'm good if you guys are good, and we're actually spot on time. So,
Fabulous.
but I will send this form out. And let me know, like I said, if you guys have any questions, I'm here for you.
Perfect. Thank you so much for your time today, Sonia. I appreciate it.
Thank you.
Thank you,
right.
Sonia.
Bye, guys. Thanks,
Yeah.
everyone.
Bye-bye.
Bye.
Bye.